Welcome back. Today I'm going to be going through the recent Netflix announcements as it's now added 13.1 million subscribers and tops revenue estimates as membership push gains streams. Netflix stock is up over 8% in the after hours and is up 1.3% just today. Having a quick look at the stock, it's almost reached $500 a share and over the last week has been pretty steady, and same with this last month. But over the last 3 months, the stock has recently had an 18, nearly 19% rally ahead of its recent earnings. Today I'm going to be going through how Netflix reported, how things went, the kind of outlook for the company, and some of their recent successes that have helped push this membership gain. As stated, Netflix added 13.1 million subscribers during the fourth quarter. The company now has 260.8 million paid subscribers, and the company also topped Wall Street revenue expectations. Shares of Netflix jumped in extended trading Tuesdays after the company reported adding 13.1 million subscribers during the fourth quarter. Stronger growth than Wall Street expected as the streamer builds its ad-supported service and cracks down on password sharing. Netflix now has 260.8 million paid subscribers, a new record for the service. The subscriber growth easily tops the 8.76 million paid memberships ads that Netflix reported in the third quarter. The company also blew past Wall Street's fourth quarter expectations of 8 million to 9 million. The results: earnings 2.11 per share versus the 2.22 per share expected. Revenue 8.83 billion versus the 8.72 billion expected, and total memberships of 260.8 million versus 256 million expected. Netflix reported fourth quarter net income of 937.8 million, or $2.11 per share, versus the 55.3 million and 12 cents per share in the prior year period. The company posted revenues of 8.83 billion for the first quarter, up 7.85 billion in the year ago quarter. As Netflix focused on improving profits, the company increased its 2024 full year operating margin forecast to 24%, up from a range of 22% to 23%. It cited the weakening of the US dollar and a stronger than forecast fourth quarter performance. The company also projects earnings per share of $4.49 for the first fiscal quarter of 2024, higher than the $4.10 Wall Street had expected. While rivals in streaming spaces have struggled to reach profitability and have been cutting down on content spend, Netflix is prepared to invest in a larger slate. However, it won't be doing that through acquisitions of traditional entertainment companies or linear assets, the company has said in its letter to shareholders on Tuesday. As the competitors adjust to these changes, it's logical to expect further consolidation, particularly among companies with larger, declining linear networks, the company said. We are not interested in acquiring linear assets, nor do we believe that further M&A among traditional entertainment companies will materially change the competitive environment, given all the consolidation that has already happened over the last decade. But that won't stop the company with partnering with content makers who have traditionally worked in the linear space. Netflix took another step towards building subscribers when it announced its Tuesday that it would stream the popular WWE Raw starting next year. More on that to come as I'll go through another article. The deal is the streaming platform's biggest yet into live entertainment. The company foresees continued competition going forward. It's why continuing to improve our entertainment offerings is so important, and as many of our competitors cut back on their content spend, we continue to invest in our slate, the company has wrote to shareholders. Netflix is still navigating its transformation from targeting subscriber growth to focusing on profit, using price hikes, password crackdowns, and ad-supported tiers to boost revenue. Investors got a sneak peek in the growth of Netflix advertising base plan earlier this month, when the company's president of advertising, Amy Reinhart, told attendees that the company now has more than 23 global monthly active users. That's up from 15 million that the company reported in November. While Netflix doesn't see ads as its primary revenue driver in 2024, it's still looking to scale that part of its business, saying, "We're focused on additional work that we can do in that space." That means making the ad plans more attractive with added streams, high resolution, downloads, and it means more engaging partner channels, you'll see us do more than that. Netflix is also looking at making an ad tier more attractive to advertisers, including by bolstering its sales team and ad operations to meet brands where they need us and how they need us. We're focused on long-term revenue potential here, and we're very optimistic about it. Overall, you can see it's been a positive earnings for Netflix, and that is why the stock is up. If I was a Netflix investor, and I know people that are, they are very bullish on this recent earnings, and they're actually finally getting to see the rewards of investing during these hard times, and even the recent downfall that it had only going back in 2021. Obviously, the stock still hasn't reached back up to those heights, but if you were smart enough to invest during this downturn, you've been seeing a lot of gains. As example, in the last year, the stock is up 35%. Another article which touches on that WWE acquisition of Netflix is here. You can see Netflix placed a $5 billion bet on live streaming with the WWE Raw deal. Netflix unveiled a $5 billion push into live television after striking a decade-long deal with the World Wrestling Entertainment to broadcast hit wrestling show Raw. The entertainment giant, which led on-demand streaming revolutions, has dabbled into live events recent years in a bid to shore up its dominant position as the world's largest streaming platform. Hours after announcing the deal, Netflix has added the 13.1 million subscribers, as we touched on more. More countries will add it over time. The company has said in a statement, TKO Group, owner WWE, outside Netflix, will show the WWE shows such as SmackDown and Specials. Shares of TKO rallied 15.8% on Tuesday, as Netflix rose as well. Overall, this seems like a great deal for Netflix, adding into another space. People might have had questions around the price that they did this acquisition for, but it looks like when comparing it to other streaming giants, the stock is not slowing down at all, and the company is clearly in the front of the runners, looking to take over the streaming space. Even in terms of Australia, the Boy Swallows universe gobbles up viewers around the world for Netflix. Trent Dalton's Boy Swallows universe has become the most successful Australian-made show yet, clocking up 7.6 million completed series views in its first 2 weeks. In the second week of the streaming service, the 7-part series about a young boy's experience whilst growing up in a household of poverty, drugs and crime in Brisbane in the 1980s was the third most watched English language TV show globally. The 27.2 million hours watched equated to roughly 4 million views of the series. Overall, you can see their success in not just America for Netflix, but worldwide. It touched on English-speaking shows, such as Spanish-speaking shows and other ones around the world are also seeing success, which is good for Netflix as they reach a bigger customer base. Looking at Netflix estimates of price, you can see there is a little bit of a mixed bag on the analyst ratings. Again, these will be updated, but some people say it's a bit lower, some people say it should be higher, but you have to do your own evaluation. Again, this isn't a company I hold at the moment. It's something I did look at one point, but it's not something I'm looking to invest into my portfolio at this time. Even if you go through its financials, they have made a really big shift into profitability over recent years, which is what shareholders were looking for. And they know that they needed to do this after years of growth and putting growth as the main target. Netflix has really made a pivot towards generating shareholder value, especially post-COVID. Overall, I think this will be good for Netflix, and I think it will be good for investors, as it is up already close to 9% over the day. And it will be interesting to see how the stock trades post that, and if they can continue to beat out on these estimates. Even with the password crackdown, I think that was a good thing. It got at some initial backlash, but you can see the rewards of it. People are coming back. It just means there's going to be more subscriptions for Netflix, and it doesn't mean they have to invest extra money into more shows or extra content. It's just more people coming back who are already watching it, just using another profile, and that results in, instead of 4 people watching on one thing, maybe you get 2 different subscriptions, so double the amount of revenue and profit. Overall, going through both the portfolios, they currently sit at a combined value of now over 55,000 AUD. This is made up of the 22,398 USD in my stake portfolio, which is now up 23.48% or 4,259 USD, and my Vanguard Australian portfolio, which is now sitting at 21,060 AUD. Going through the right holdings and through the rest of the week, It has been a strong week again for the S&P, up 2.2%. That's why my stock portfolio is up, even without me making any additions. I did recently get a dividend into my Vanguard portfolio, which can be seen here of the $171 available cash. So I will be investing that when I put a bit more money in. I'll probably just be putting it into VGS, which has been shooting up in price up to $114 now a share. Overall, that was just a bit more of a wrap up of how Netflix is looking and how my overall stock portfolio is looking. I'll still do the update on the weekend, but I just wanted to cover that recent Netflix earnings announcement.